Did you know that the average homeowner is 40 times wealthier than the average renter? If you want to know how to take a modest down payment and turn it into serious wealth, stick around, we're going to talk about that next. Hey friends, Ryan Reynolds here with Keller Williams Consultants Realty, your KW certified real estate planner, here today to talk about building wealth through real estate. So when you're a renter, the biggest problem you have is you're trying to save up for a down payment at the same time you're paying off your landlord's mortgage and actually building wealth for him. Federal Reserve's latest data shows that the median net worth of a homeowner is right around $396,200. And if you compare that to the median net worth of a renter of just $10,400, that's nearly a 40 times difference in the net worth. And so you kind of ask, why is that the case? Well, the biggest reason for that is that as a renter, you're basically paying everything at current market rates. And when you're a homeowner, what happens is you lock in your cost of your housing, for one. So now you might go up a little bit as taxes go up in terms of your payment and insurance goes up. But in general, your payment will be staying the same or maybe going down if you have the opportunity to refinance over time. As a renter, when you're renting somewhere, you can expect the rent to go up year after year. Now, if we also look at the appreciation you're going to experience on your down payment. And the power of appreciation really comes in the form of leverage. And what I mean by that is that the appreciation rate for your house is not the same as the appreciation rate for your equity. Let's imagine you buy a house for $300,000 with a 20% down payment. Now that is about $60,000 you'd have to come up with, and that's a whole nother video trying to figure out how to come up with that amount of money. So over the next few years, let's say 5-year period, that house appreciates at 4% per year. And 4% is the actual median appreciation rate for housing in the United States over the past 75 to 100 years. And then at the end of year 5, your house is now worth $365,000. So what you've made is actually a difference in equity of $65,000, which is not 4% increase over your down payment. It's actually over 100% of increase because your down payment was 60 grand, and now you have an additional 65,000 for $125,000 in equity. So that is the power of leverage. You control a large asset with just a small down payment. I'll give you another real life example. I actually met with a client this past week, and we're getting ready to put his condo on the market. He originally bought that condo in 2021, and he had to pay $167,000. And at that time, he actually had to bid $10,000 over the asking price, and he had to guarantee that the appraisal would go or else he would make up the difference. Well, the appraisal came in like 10 grand low, and he ended up bringing an extra $10,000 to the situation. So at the end of the day, he put a down payment down of about $33,000, which would have been the 20% of the $167,000 he was purchasing it for. So I ran numbers for him this week, and that condo should be selling here soon for right around $220,000. And so when you think about that, in just a few years, from 2021 to 2025, we're talking 4 years, he gained $53,000 in equity. And if you subtract all of his costs and everything like that from selling the house, he'll realize over $70,000 in equity, and that's more than double. Now, from 21 to 25, the appreciation rates were a little higher than we would normally see. However, that's just a good real life actual example of how you can make money and build wealth through real estate. So let's take that one step farther and imagine you're a real estate investor and you can afford to buy a house every year. You put 20% down on a house, and as we mentioned, if you put 20% down, let's just say it's a $100,000 house for easy math. If you put 20% down on that house, that means you put $20,000 down on a $100,000 house. It goes up by let's just make it say 5% that year. Goes up by 5%, that means it's now worth $105,000. But that $5,000 again is not 5% of the down payment, it's actually 20% of the down payment. And so you've actually increased your equity in the house by 20% just in 1 year. And I would challenge you to find any other investment where you can realize those kind of returns over and over and over without doing something completely illegal. So in conclusion and wrapping things up, homeownership isn't just about having a place to live. It's actually about building a foundation for your financial future. If you're a renter, you need to start planning now to have a down payment and to get to be a homeowner as soon as possible. And if you're a homeowner, you may just be one step away from being a real estate investor and really building a lot of wealth. If you'd like to talk about your personal real estate plan, feel free to reach out. My name again is Ryan Reynolds with Keller Williams Consultants Realty, your KW certified real estate planner. And with the Ryan Reynolds team, it's, as always, unlimited opportunities and exceptional experiences.